Hey there traders, welcome to another session review. Now we're going to be looking at the New York session, specifically the ICT Silver Bullet time between 10 a.m. and 11 a.m. just to see what kind of opportunity presented itself today on May the 17th, 2023 when looking at the EURUSD pair. That's my favorite pair to trade at the moment. Before we jump in to the charts, quick disclaimer there for you guys, just to let you know that this video is for educational purposes only and should not be considered as financial advice. With that said, let us jump onto the charts and see what today offered. So from the London session that we looked at this morning, we can see price has been very bearish. We have taken out the weekly low and not closed back inside the range at all. So we've continued. In fact, we pulled back, we retested the weekly low and then rejected. So this is really bearish indeed. So we're looking for extra liquidity levels now beyond the weekly low. The first one I had marked out, this line here, is a 1 hour swing low, which I will show you here. We have taken that out. So the next area of interest for me to the downside is this 1 hour fair value gap into a 1 hour order block, and in there we have, you can see a fair value gap to the downside, fair value gap to the upside. So the overlapping section here between the two, I believe, is classed as a balanced price range, so that would be another area of interest that I would like to have marked on my chart. If we jump now into the actual session, let's see what opportunities got. So my bias for this session, let's go on the 1 minute, that I'm looking at obviously would be the session high for liquidity, or even this swing high and this swing high look very promising. And even prior to the session high as well, these guys are all in the money as well. So we have some nice levels of buy side. Big swings. Where we've got big swings here. That one's probably the one that would be most interesting to me on the upside. And obviously this 1 hour fair value gap to the downside is a potential rejection area. Let's skip forward and see what we get. So this is our 10 a.m. start candle now. We skip in, so straight away we are taking out the session low here. So let's just mark that as sell side. Anytime I see sell side hovering just above another fair value gap, it's kind of a good indication that price is probably going to be drawn down to that to take the liquidity. So now let's see if we can get a reversal on. You can see swing high taken here. We've left behind a fair value gap. Just see that inside my pink there, and a volume imbalance as well. If I see volume imbalances and fair value gaps, it's a really good indication that it's a strong move. Another fair value gap, so I would be now about a body close above that. So I would definitely take an entry in a long position now from here. 2.8 pip stop if it got tagged, and my take profit is always 5.2. And come back, look like it. Okay, we'll go higher. Fair value gap up here, broken this structure as well now. So with this silver bullet method, 5 pip stop loss is my maximum allowed stop loss. So with the silver bullet method, from what I understand from ICT, it's really jumping in on any kind of imbalance to get yourself in line with the market, because you're expecting it now to be pushing at this hour into the liquidity. So our liquidity, well, for me, I want a 5.2 pip. However, the target would be much higher if you had the nerve to hold it. Let's see. Get tagged in on this one. Not tagged in there. Okay, so that's just tripped in. It's debatable whether you'd actually get tagged in on that because of spread. Well, let's just say that we are in. Hit my 5.2 straight away. So now we're looking at taking some of this buy side out. So we've got also buy side into a fair value gap there, which would be a good target. I would have closed in full by now if I'd have got entered. Okay, so it's taken the buy side, which is good. Now, out of interest, because I'm not so sure if I would have got in there, we have the fair value gap there, which again, that looks like it would have. I'd have put an entry there with a 5 pip. 5 pip max stop and a 5.2. So this second entry would have also played out. The ultimate target is the top there. Come down a little bit. We've not really broken any structure. Still going. So we've come down, we've come back, broken structure. We've got a volume imbalance and a fair value gap. So potential 5. And 5.2. This final one work? You were getting really greedy. Don't think that that will be a wise entry, because if you take the premium discount, the first two we were entering in a discount. This entry is obviously in a premium of the whole range, so that wouldn't be an entry that you would want to get. Let's just see if it gets to the 5.2. Nah. So yeah, that's why you don't really want to be entering longs when you're in a premium. Also, actually, to be aware, we're into an order block here. Fair value gap, the order block starts there, so it's just tapped an order block, which is sensible. So again, that's why you wouldn't want to be long in there, because there's just literally no headroom before you hit quite major resistance. 3.5. I wouldn't want to be looking short because we've not actually taken any significant liquidity, and we're into the thing. We're taking a session low, pull back, so what I would be looking for is for the session high really to get taken. Once you take one side of the range out, you would expect the other side to get hit, so I wouldn't want to be short in that. Although there is probably some 5 pip shorts coming down. It's not really filling any of the fair value gaps though, is it? Anyway, we're outside the we're outside the 11 o'clock window now, so that is the Silver Bullet hour in New York. Euro USD, 2 trade opportunities. Bagging yourself at least 5 pips. If you were to go up to that one, 11. Up to that order block, 11. How does this look on a 2-minute? So first entry does again just get touched on the 2-minute. Your entry would be here, so it wouldn't be an entry because it's above premium on the 2-minute. There was only 2 entries on the 1-minute, 1 entry on the 2-minute, which again is debatable as to whether you would get triggered. Has that tabbed it there? No, it hasn't. That'd be interesting to see if we can come down into this before it accelerates off. Setup provided itself there. Is it going to tag it? No. Oh, we do eventually take the buy side. Get a reversal. So the draws on liquidity were correct then. 1 hour fair value gap to the upside here. It's just whether your entry would get triggered or not. On the 3-minute. Oh, that is just on. Look at that. On the 3-minute chart, ICT does say that you can enter anytime up to the 11 o'clock. On 3 minutes, we come back to optimal trade entry, fair value gap. Take out the high, 5 pip stop, which is a pretty safe stop because it's under these fair value gaps. I think that's not so bad into that order block. So 5 pip stop. Again, it only just touches it though, doesn't it? And up to there. These are all debatable because of spread. Anyway, I hope that's helpful. And see if you took out the 50%. Yeah, my 5 pip stop would have still worked if I took the trade at 50% on the bigger fair value gap. Oh, that's the fair value gap there actually, isn't it? And 3R. That could have entered you. Got these. But stick with the 1 minute for now. The 1 minute seemed to play nicely and would have given me the results that I wanted. Okay, hope that's helpful. Please leave your comments in the description. Please leave your comments in the description below. Please leave your comments down below. If you have any questions, or again, if you have any feedback, things that you could think I could do a little bit better on there, or things that you've noticed yourselves if looking at this pair. And I'll see you in the next one.